part, we want to talk about the hierarchy of investors. How did this strategy and guide come about? And maybe we can talk about how investors can use it for their benefit. And what we're going to do is we're going to go ahead and share our screen.
Okay.
So that way we can pull up the hierarchy of investors diagram itself, and you can kind of go through it with us. That would be great. There we are.
Yeah. So in 2018 and in early, I started my blog in 2018, and probably sometime in 2019, a couple of people said, Chris, what are you, it wasn't clear. They said, what are you trying to do with your blog? And the first thing that I thought of, I don't know if you remember back from your school days, something called Maslow's hierarchy of needs. And that was a theory of psychology developed a long, long time ago. And Maslow said that, the way humans work is, they go from one level to the next. And the first is, the physical needs, food, water, and shelter. And then, you get safety and security and belonging and love. And at the very top of the pyramid, you get to something called self-actualization. And so that's kind of what got me started on this. So if you look at this hierarchy of investors, and I did this purposely, down, not even on the hierarchy, in the shadow are the conventional investors. They're not even on the ladder, so to speak. They're down there. That's stocks, bonds, mutual funds, and ETFs, through 401ks and IRAs. So they're in the dark down there. And then as you get on the this, I call it pyramid or hierarchy. I use those two terms interchangeably. These are just some examples of all the alternative investments that you could invest in. And unlike Maslow's hierarchy of needs, you don't have to start at the bottom and move to the top. That's typically the way it works. Some people become accidental alternative investors when they've outgrown their first home and they go to buy the next one because the family's gotten bigger and they need more space. And they say, hey, instead of selling that first property, why don't we just keep it? And so, just kind of by accident, they became an alternative investor. Then maybe they move into some other thing. So those are some examples, not in any particular order, of the alternative investment. But up on the left side, you see the disadvantage, the neutral, and the advantage. Those are 13 different categories where I compare how alternatives are to conventional investments across those 13 different things. And so 11 of them, if I get this right, so 10 of them are in favor of alternatives, two are neutral, and one is in favor of conventional. So let's talk about the advantage that conventional investments have. So that's at the top, it's liquidity. The only advantage that stocks, bonds, and mutual funds have over any of this other stuff is liquidity. You can instantly turn them into cash. But what is the alter ego of liquidity? It's volatility. So the ability to buy and sell at will is what creates these wild gyrations. And then if you look at all the other things in green there, those are all the areas where alternatives are superior. And there's a couple of them that I find really fun to talk about. One of them in there is insurability. So think about this. You're a conventional investment. You've got a $500,000 stock portfolio, and you walk into your insurance agent and say, you know what, I'd like to protect this asset against loss. I would like to buy an insurance policy to protect my stock portfolio. What is the answer to that question? After they stop laughing, the answer is no. So, insurance people are pretty sharp about analyzing risk. What is it about the conventional investments that are uninsurable? I mean, you would never, people will pour money into their, these retirement plans, way more money than they in their house, and they would never think of owning a house and not having it insured. So, but with alternative investments, if you've got an apartment building or a single family rental or a piece of earth moving equipment, guess what you can get? You can buy insurance. And another one is leverage. So if I'm a brand new investor, a conventional investor, and I want to go out and buy $100,000 and build a portfolio, and I go to the bank and I say, look, I've got $20,000. I would like to borrow $80,000 from you to build my stock market portfolio. After they get done laughing and tell you that they don't lend against conventional investments, there's another thing. So bankers are pretty smart about, what's good collateral and what's not, and conventional investments are not. So, but it's unusual. It would be very unusual to buy a piece of real estate without leverage. So, and then just one more is the returns. If the S&P 500 is kind of the benchmark for the overall stock market in the United States. And since its inception, it's delivered an annual rate of return of about 9.8%. It's very common to have rates of return at the low end starting at 15% and up to 40% in alternative investments. And that just, when conventional investments, they just think I'm either a scammer or I'm doing something illegal when I tell them I routinely make returns like that. But it's very possible. It's all legal. It's all ethical. And so I've used this to try to explain why the people that are down there in the dark need to think about looking up and changing the way they invest their money if they ever want to get to a place where they can make work a choice instead of a necessity.
I love it. I love the guide you've created.
Yeah.
But just to add to one thing here is what our attempt here at CPI, what we're trying to change is to create some liquidity, or not some, but create liquidity in the syndicated, the exempt market or the private placement space. And we're doing that through the tokenization of shares and to create a secondary market. But that's a topic of another day. But
one of the first companies in Canada to create liquidity of shares in limited.
Well, and that's a great thing. That would be another one of those factors to take into consideration when you're picking a syndicator. Is there some liquidity other than when the exit is? And if you guys have created something, you're melding the best of two worlds together there. So we'd have to maybe that wouldn't be a disadvantage with you guys. That's awesome.
Great, awesome, really.
Thanks for putting this together. This really could make people's minds expand that are really stuck in the shadows.
And I love that how you put it in the shadows, because that's the truth. I mean, it's the stocks and bonds and mutual funds is made to seem that they're the safe investment, but just like Chris said, the volatility that exists is, compared to real estate is, totally night and day.
Yeah, and people don't know what they don't know, right? Even when you were saying that you were talking to your financial advisors and they're like, that's a scam, there's no way. Our advisors here too were like, you guys got to take the numbers down because it sounds a little bit too good to be true. But once people really catch on to what we're really talking about and educate themselves, it becomes something really exciting.
Once people receive their monthly distributions,
yes, their monthly distributions that we send.